Welcome to the Corlin Economics Report, a weekly look at financial and political topics relating to asset-based investing. Guests on this program pay no fees to appear, and guests and hosts disclose any equity interest in companies profiled. Now, the Corlin Economics Report.
Welcome in. You are listening to the weekend edition of the KE Report. My name is Corey Fleck, and I am your host for the first hour. I just want to reiterate this week was a bit slower in terms of daily editorials on the website because I was at that Sprott conference throughout the week. It's a good conference to meet up with companies, but I do have to say attendance again was pretty low. It was a bit of a slow show, which just goes to speak to the overall metals markets. We're going to only spend this first segment on metals, and in the rest of the first hour, talk more about what we heard from Trump at the tail end of the week, as well as talk about some of the other markets that are actually catching our eye. I am kicking off the show with Jordan Roy-Byrne, founder and editor of The Daily Gold. And Jordan, regarding gold first, gold was selling off throughout the week, but thankfully, on more or less Thursday, right before the end of the trading day, we had some comments by Trump in an interview with CNBC, and on Friday, reiterating some of these comments through some tweets, it managed to reverse the dollar move up, and gold at least managed to gain a little bit. But in all fairness, it did drop to a low of just above 1210 on Thursday. What do you have to say about the overall gold complex right now, continuing to, again, be very much oversold?
Yeah, Corey, it's been interesting because so many people, myself included, we were expecting a rally in the mid-1200s, and then it looked like it could be 1240, and then it broke down. And then I said last weekend, I said, look for a test of 1220, and then it bounced, and we got that, I believe, on Wednesday. And then Thursday, we had the Trump comments. As you know, I put out a subscriber update before yesterday saying that, well, it's possible gold bottom today, but it could go a little bit lower because there's stronger support around 1210 and thereabouts. And so I think, technically speaking, it looks good how this happened, even though it happened on Trump's comments. It doesn't really matter what the reason is. I mean, that's what smart traders always say. And if you look at a monthly chart of gold, there's strong monthly support around 1200 to 1210. And that, I mean, when you see strong support on a monthly chart, that's significant for at least a few months. So I think gold has probably seen its low for the next couple months. I mean, we were talking beforehand, and I think it's probably going to hold up into September, maybe throughout the entire month. Maybe it won't be October until 1200 gets tested again. So I think again, that low around 1210 is probably going to hold up for a few months. On the upside, I mean, the first key resistance is probably, looking at the chart now, 1240, and then you have 1260, and then I have some confluence of resistance around 1275. So I think 1260 is probably going to get tested on this rally. It may even pop above it for a day or two. So that's what I'm looking for as far as this counter trend rally. I don't like the larger setup at hand, but I think gold here and now is going to hold that low around 1210, and it's set up for some strength over the weeks ahead.
Now, Jordan, when you say 1260, 1270 might be the next level that gold sees, that's over $100 off of still that high that I think everybody is waiting for in 2016, and even that recent peak that we put in just earlier this year in, let's say, mid-April. Overall, if we only get a bounce to 1260, that's not going to really bring the masses back on board for gold, will it?
No, I really don't see a lot of. I don't see a lot of people coming back. I mean, this rebound. The reason for it, I think, would be a sentiment unwind. Basically, you just get people unwinding their bearish positions. There's no fundamental reason for a rebound. I mean, we've talked about seasonality, and I don't care for that. It's really too subjective. But yeah, I don't expect this to bring a lot of people back to the sector. I mean, we're not going to see an influx of retail back into the sector until we see a strong move higher in gold. You know, whether that happens now or later at a lower level remains to be seen. I mean, I think it's probably going to happen sometime next year at a lower level than where we are now. But yeah, there's really no hope for a lot of people coming back to the sector right now. I just don't see it. Now, it's interesting because there's a kind of a dichotomy, because if a company is making a legitimate discovery, money is really flowing into those areas. So that's something I've been talking about. I mean, a junior that can make a discovery, a legitimate discovery, they will be rewarded in the market, regardless of how metals prices are acting. So that's where the capital and the interest is going to flow in the meantime, as metals struggle here in the months ahead, I think.
Well, let's talk about what's going on in the stocks, because you look at GDX, and as we're recording this, GDX is still trading below 22. It is Friday, and it very much looks like GDX will close this week below that 22 level. More importantly, is that lower part of the trading range that it keeps on seeming to bottom out at, which is right about 21. But overall, even as gold is broken down, GDX still is holding in there, but it's very weak. That it's the overall breadth of GDX continues to be, well, small. Only a few stocks are helping to hold this ETF in there. Do you have a comment on that?
Yes, I do. And that's a very good point, Corey. And this is something that I believe we talked about 1 week or 2 weeks ago. And that's even though the miners appear to be leading gold. If you looked at the GDX advanced decline line, and I talked about this in an article, so that's a breadth indicator, and it's an excellent leading indicator. And that was not confirming the strength that we saw in the GDX to gold ratio. So in other words, what was happening is most of GDX was pretty weak, but you had 6 stocks, which is about 35% of the index, which were really strong, and their charts look like they're in bull markets, basically. So that part of the index was really holding the index up. Looking at the participation of the entire index, and to get that, you look at the advanced decline line, that's pretty weak. Where we are here and now, just yesterday, after we made this bottom, it appears, the advanced decline line hit a 3.5-month low yesterday. So the participation of the sector remains very weak. And if the GDX advanced decline line, Corey, if that remains weak during this rally, it's just not, it's just ominously bearish, I think, when this rally runs its course, because it would reflect that participation is really weak. And I think these strong stocks that have been doing really well, they're going to crack if gold loses this 1,200 support. Now, I'm not saying that's going to happen the next month or two, because earlier I said I think we're probably going to hold this low well into September. So this is probably an October or November issue that I'm talking about here. But these strong stocks will get hit at some point if gold continues to trend down. I think it'll probably be during the next decline in gold when it goes into the 1100s. I mean, that's going to affect these strong stocks. So ultimately, if that does happen, these indices, GDX, GDXJ, they're going to roll over and break down, even though they haven't yet. But I would, and even just in the last couple of days, Corey, let's talk about that, because we had this pretty big positive reversal on the Trump comments. And if you just look at GDX and GDXJ, I mean, the action of the last couple of days, I mean, they've just barely done anything. They haven't outperformed. And so if you were looking at these charts over the last couple of months, you'd be getting excited seeing, oh, well, the miners are leading gold. Like, they've been holding up well. Well, what happened when gold finally put in a low and today it's up? I mean, there's just barely any strength out of GDX and GDXJ. So that's concerning and damning if you're a gold bug expecting some massive rally. I just don't see that happening. So, yes, GDX and GDXJ, I think during this rally, unfortunately, I think there's a risk that they could just bide their time and kind of maybe they'll rise a little bit. Maybe they'll trade sideways for a while. But that's my gut feel over the next month or two, more so than we're going to see this huge rebound all the way back up to, the earlier highs from this year. I don't see that. I think the best case scenario would be GDX and GDXJ rally back to those late June, early July highs. I strongly see no chance that we're going to go above those.
Yeah, right now it's no denying that the metals are in this downtrend, and it really is going to take something to change to break that downtrend. Let's also talk about silver, because silver is going to, even after the bit of a rebound at the tail end of the week, still going to close on a weekly basis at a 32-week low. We need to go back to the early part of July for these last price levels in silver. plus SIL. That's one aspect. It's the Silver Miners ETF that I think is very concerning, where it's going to close this week at a level that we haven't seen since about April of 2016. Silver continues, even though it is even more oversold, and people look at the COT reports and say silver is due for a bounce coming up. Fact of the matter is, this chart's even weaker than gold, isn't it?
Yeah, it is. And I think that if you go back to the beginning of the bear market in 2011, we know that silver peaked by several months in advance of gold. So I think it's possible this time around that this final decline, this final breakdown that we're seeing, I think silver could be leading the way, and maybe silver will ultimately bottom first before gold. But yeah, here and now, it's really ugly. Silver's already broken down to, I believe, on a closing basis. I'm just looking here on a daily closing basis. Yesterday, it closed at 1543 last summer. If silver were to go below that, that would be more than a 2-year low. So gold isn't, of course, at a 2-year low yet. So, but silver, I think, is probably going to rebound. You know, I'm looking at the triangle breakdown. If you connect the lows from mid 2017 and the underside of that former support is right around $16. So that would be my upside for silver during this rally. It could rally up to 16, but yeah, I mean, it's really oversold here, Corey, but it's just an ugly chart. And after this rally, it's probably, you know, the path of least resistance is very likely to be lower. So we'll see what happens. But if silver rallies back to 16 and consolidates there for several weeks, I mean, that could be setting up another opportunity for the shorts to pound it lower. But yeah, unfortunately, that's the case in silver. It's due for a relief rally here and now, but beyond that relief rally, as we get into the fall and winter, I would expect lower prices. I mean, looking at this triangle from about 1812 to 1543, that's more than 2.5 points. And if you measure that down from the breakdown point, you could potentially get some targets in the 12s. So ultimately, I think silver is going to retest that low that it made in January 2016 in the 13s. Maybe it'll even go a little bit below it before it bottoms. But yes, this is definitely a market you want to stay away from on the long side, unless you're playing a quick snapback rally over the next several days and weeks.
And that might be one of the plays that some people can do. But again, if you're playing this in a longer term sense, you do need to be very aware of how damaging this recent breakdown has been. One more quick comment before we wrap it up. You and I do talk a lot about how the U.S. equity markets impact the metals, how the Fed policy impacts the metals. One aspect that we do talk about here and there is the U.S. dollar, but I think the U.S. dollar has been a key driver, at least this week, especially in that reversal day, the last 2 days of the week that we saw. The U.S. dollar managed to, well, put in what might be a significant top, what might only be a short-term top, thanks a lot to Trump's comments. What's your outlook for the U.S. dollar after that little sell-off that we saw at the tail end of the week, and managing to push the dollar back below 95 on the dollar index to close the week?
Yes, Corey, the price action the last 2 days is fairly bearish. You have a failed breakout yesterday, and then today you have confirmation in that you have a strong decline. It's down 0.65% today. But again, even with that kind of steep drop, we're not seeing, I mean, I think gold was only up $6. You know, the miners they're up today, but they're painting some weak candles. I mean, that is not encouraging when you have this strong of a decline in the dollar. But back to the dollar, it's failed to break out, but in a very short-term sense. But in the larger sense, it's consolidating its strong move up that it had from April into the end of May. And it went from 89 to 95 basically in less than a month and a half. And it's been consolidating, digesting that move rather nicely. I mean, hanging around 94 and 95. So it's working off the strongly overbought condition that it had when it first hit 95. There's really strong support at 93. So there's also some support around 93 and a half. So even if the dollar were to test 93 and trade lower for another month or two, it would not change the larger outlook which is bullish. I mean, it's holding well above a rising 200-day moving average. That's bullish. So it lines up with our view on the metals that we're going to see a relief rally, a counter trend rally, and that gold's probably going to hold its low well into September. And that means it's probably unlikely that, it's unlikely that the dollar is going to break out and sustain it over the next month or two. I think it's going to continue to consolidate and correct here, but it's going to be more of a consolidation and correction in terms of time and not in terms of price, because I don't see the dollar going below 93.
All right. Well, Jordan, interesting comments. Sorry that they aren't maybe a little bit more bullish for the metals. But again, we aren't saying that the metals are just going to break down. It's just a market right now that needs some other things to happen. Fed policy, dollar moves, lots at play right here, and the metals are very much ignored. But I don't know if they're just going to get hammered a whole lot lower. It's something that we will need to follow, and first and foremost, let's see what this rebound rally, which we are due for, where it will take us. Jordan, thanks for your time. Everybody stick around. I am going to be right back, and as I said, we are going to be focusing a bit more on the broad markets and some other key movers.
Al Corlin's firm, A.B. Corlin and Associates Incorporated, provides consulting services to public companies on matters of regulatory compliance. To find out more, follow the link from www.kereport.com. The Corlin Economics Report will be back after this brief timeout.